So I want to welcome everyone to the African American Chamber of Commerce second webinar of this year. Today we're going to be talking about buying a business versus starting up a business. And it's important that you understand the difference. And there's pros and cons to everything. And we have the bright and lovely Jillian, who is going to break down the two differences so that you can determine what will work best for you. We appreciate the participants in our videos. We ask that you subscribe to our channel, and that is the African American Chamber of Commerce of Hudson Valley, so AACCHV. If you're not already following us on our social media channels, please do. We have a Facebook account, and we also have an Instagram account. If you're not a member, please, I urge you to become a member. Our website is www.aacchudsonvalley.org. And with no further ado, I am going to turn it over to Jillian so that she can begin her webinar.
All right, everyone. Welcome again to our second installment of our webinar series. Tonight's topic is the pros and cons of starting up a business versus buying a business. And, again, we hope to always bring you informative, educational, engaging content. And I hope tonight is no different on that count. So let me start my sharing. All right, fantastic. So my name is Jillian Mullings. Tonight, I want to talk to you about the benefits of starting up versus buying a business. What are the pros and cons? I already said that. Sorry. All right. So in a nutshell, buying a business is one of the doorways to entrepreneurship, right? It's too often not considered by those seeking self-employment. Most people seem to want to start a new business or buy a franchise, but rarely do they want to start by buying a whole new business that's already established. And there are, here are the two basic arguments, right? For starting up, you can start up from scratch, and that will give you freedom, creativity, and full control over your business vision. However, it can be risky and require more effort and time to establish. If you're looking at buying a business, on the other hand, it provides way more stable customer base, which is, cannot be underrated. You already have an established brand. You already have ongoing operations. However, the downside of this is that it's usually the cost that is prohibitive for most people. Significantly more expensive to buy an existing thriving business versus starting from scratch. But aside from those basic concerns, there are a couple of other things that we have to consider. First one would be your passion and your interests in wanting to be in business in the first place, right? So on the startup side, you want to ask yourself, what are your interests? What are you excited about? Is it something that is just so revolutionary and groundbreaking that you have to do this? There might be cases where nobody else is doing something. Who could have imagined 10 years ago, 20 years ago, that there would be a company called Uber that doesn't own any taxis, but it replaced 99% of the taxi business in the country? A company called Airbnb, they don't own any hotels. They've definitely made a big dent in the hospitality industry for a fraction of the costs, right? So what if you have an idea that is just so groundbreaking that nobody's ever been thought to do it or had the courage to follow through on it? Maybe it's your turn, right? So if the business you want to own does not yet exist, you may be the person that has to start it. If you're talking about buying a business, maybe it's because you have some extensive knowledge and experience and skill related to something that you know that there is a demand for in your area or your market, that it might make sense for you to start up a business. And if you can afford it, buy something that's already established, right? It doesn't, we're talking about passions and interests, and people usually associate high passion with startups. But a lot of times, people who are buying an existing business already have as much passion, but they may also have more liquid capital to buy a business, right? So they're no less passionate, but the cost, if they can afford it, that's a quick way to get started. The next thing A next thing to consider is your focus and responsibility, right? So when you're talking about starting up a business, it's you are the chief cook and bottle washer. You're doing all the things, right? You're single-mindedly focused on starting up your business. You are doing as many of the tasks. You may have, some issues of controlling every single aspect of the development of your business because you don't want anything to go wrong and you can't risk anything going wrong. And you want to make sure you get off to a good start as much as possible. On the other hand, if you're talking about buying an existing business, maybe you want to just step right in. It's a turnkey operation. They already have their customer base. We already talked about that. They have a marketing plan. They have an established set of procedures. They already have funding. They have track record of profits or at least positive revenue year over year. So if you, again, want to just focus on, I already know this. I have the skills. I have the experience. I know this business inside and out. And it's my turn now. I want to be the boss and I have the funds to do it. Then why start up from scratch? Just jump right in, buy a business. The next thing to consider, and to me, this is usually the biggest deciding factor with starting up versus buying an existing business, is the cash flow. This is a major, major issue no matter how long you've been in business, whether it's day one or 2001, right? No matter how long you've been in business, funding and having good cash flow is always going to be a critical question. And in this instance, again, if you have the funds to do it, you're going to start right out the gate buying a business with revenue, cash flow, track record with a local bank, track record with alternative lending, track record with people who might supply alternative funding and microloans and grants, right? You have a history that you can build on and you're not starting up from scratch. This is significant because the next time you need to make an investment, maybe you need some new equipment, maybe you need to hire a manager so that you can step back from the business and go look to expand in other markets, right? All of those things cost money. And when you go and sit down in front of a lender or somebody who's providing grants, they want to see that you have a track record, and that is going to be strongly in your favor when you're buying an existing business that's doing well. Starting up, on the other hand, again, you're the chief, you're the cook, you're the bottle washer, you're the guy that takes out the garbage, you're doing your own marketing, you're doing sales, or you're trying to find salespeople, right? You're perfecting your product or your service, you're constantly tweaking. So this is where the danger of that old saying of, you don't want to be stuck working in your business. You should be working on your business. Startups tend to be stuck in that mode for a while because all of the labor intensive things that they have to do require so much of their time and so much of their brain power that it's a drain that kind of makes it harder to make money, to start making profit, to start earning revenue that you can grow with, right? So those are the pros and cons of three major areas to consider when you're talking about startup versus buying an existing business. But what else is there to consider? This is a big one, right? You have to decide on what type of business entity you're going to create to run your business. And this is it's almost like joke at this point. Whenever you go online to the financial gurus online or the business gurus online, everybody's talking about, oh, you got to have an LLC, set up an LLC, as if it's some kind of a cure-all for any kind of business that you want to be in. And that is just not the case. And I have seen enough stories where people took the advice, didn't have the right type of business, didn't do the right type of other planning that they need to do, didn't consult with the professionals that they need to consult with. And a year or two later, they're trying to backpedal out of the LLC and maybe switch to an S Corp, or maybe they are not at the level where they need to, form such a structure. So you don't want to get yourself into too much trouble by choosing the wrong business entity type. Everything you do in business, you're inviting the IRS to look over your shoulder. So this is a very, very critical part of the process, right? So let's look at some of the things that we have to consider. So these are the most common business entity types. Some of these you've probably heard of, but maybe you're not quite clear of what any of this stuff means, right? So we'll start with the basics. A sole proprietor. It's basically an individual who has a great idea or a great talent for something. I think the last webinar I did, I used the example of somebody who's really good at braiding hair and you've just always done it. You know, you hooked your friends up and you make some money, but you're so good at it and you've grown such a demand that it makes sense. It makes sense to actually start up a business, but you don't want to go too crazy with it. So you set up what's called a DBA. And that means you're getting a tax ID number and you're registering with your local county clerk's office, right? Sort of just letting people know you're hanging a shingle and you're going to call it Kiki's Hair Braiding, right? And now you have a business. Then you have the next business type is a business partnership where you and a partner, so you braid hair and your partner can do facials, right? Your partner's an esthetician or your partner is a nail tech. And now you have two people sharing a space, sharing all the costs of a business, and your business partners under a DBA, right? The next level up from that is what's called a limited liability company, which is the thing that everybody talks about online. And for good reason. It does have a key element that separates you from the sole proprietorship and the partnership. It allows you to protect yourself personally, right? So I want you to think about all of these types of business entities as sort of different. Oh, sorry, I just noticed a typo. Different levels of personal liability, right? So in a sole proprietorship and a partnership, even though you have a business name and you might have a business location, it's clearly a business, it's not my house. You have not separated your business from yourself personally. So if Kiki uses a product on somebody and their scalp becomes inflamed because they're allergic, and it was not properly disclosed, that person can sue you for the cost of the emergency room visit, the cost of whatever treatment the dermatologist gave, and maybe for pain and suffering, right? They are going to sue Kiki's hair braiding, but that's going to come to Kiki personally because she did not create an entity, a business entity, where a customer could sue the business instead of her. So this is where a limited liability company comes in. And this is one of the main reasons why it's so popular, right? Because now instead of filing a business license with your local county clerk, now you're filing with the Department of State, right? And there's a whole set of procedures. So it protects you from personal liability. So when your customer sues Kiki's hair braiding, they're suing the company. And then your personal assets, your savings account, your checking account, your home that you own, your car, all of your other personal assets will not be disturbed. They're only going to sue whatever assets the business has. Okay. Next and final one, the biggest one, is corporations, right? And there are three main types of corporations. You have your big C corporations, right? The big mega companies, Google, Apple, I can't even think, just name a big company. Hertz Car Rental, that's a corporation. Those are big names that many people know. You're likely hear these as household names. Then you have S corporations, and that is a simpler type of a corporation. It's usually the next level if your business is thriving and you're growing, and also depending on how much revenue your business brings in, maybe you want to step up from an LLC to an S corp, right? So it's still not a mega corporation, but you have now passed a certain income threshold, maybe certain revenue thresholds, that it makes sense to change your business entity type. And then you have nonprofit corporations, right? So these are charities that you might know, hospitals, colleges and universities, and some schools, right? So those are organizations that provide valuable services in their communities. They may generate lots and lots of money from fundraising, from donations, from just running a business. but they cannot show profit at the end of the year, and they're usually exempt from taxes. And they have a lot of rules that they have to follow to the T, or else they might lose their tax exempt status. So that's a brief rundown of the main business entity types. And here's a little grid that will tell you, based on the entity type, where you have to go to file the paperwork, and then what type of paperwork you have to file for each one, right? And as you can see up here, with the sole proprietorship and the partnership, they're both going to usually a local county clerk, right? Or some kind of town supervisor. It depends on, it's different in every state. You want to check where you file these, and it's usually a very, very simple process. Then when you get to limited liability companies, you're going anything above LLCs up to corporations and limited partnerships. That's a whole other thing. These all go through the Department of State, right? For an LLC, you have to file articles of organization and operating agreement. This operating agreement is that thing that helps to separate your personal liability from your business liability, right? Which is very important. Then when you get down to the S Corp and C Corp, it tells you this is the type of documentation you have to file. And then for limited partnerships, we didn't really touch on that, but it's similar to a limited liability company. And it tells you the document here that you have to file. So I don't want you to hear some stuff online. I mean, there are people online. Yes, some of them are successful and, they're like genius business people, but what they do in their business may not be right for what you have to do in your type of business. So before you take their advice as true, you want to consult with a tax advisor. Could be a CPA, could be an enrolled agent, or an attorney right? Because especially in the case of partnerships and corporations and LLCs where there are more than one person involved, you also want to make sure you have certain contracts in place of how the business is going to be divided, or who gets what percentage. What is your share of the business? Are you coming in with the intellectual property and I'm going to front all the money? Or are we kind of both coming in with the same idea and some kind of equal share of money, right? You need an attorney to kind of work out the agreement, the legally binding agreements with you and your partners, because when things go south, and they often do, you want to make sure you're protecting yourself again from any unnecessary liability or lawsuits, or even protecting yourself from your partner running away with the business, right? You don't know who you're going into business with sometimes, and they might be representing themselves to other people as something else and swipe the business out from under you without any kind of documentation. There's nothing to stop them. So legal advice and tax advice is highly recommended before you jump into any kind of partnership or just even a business by yourself. You want to make sure you're protected so that when you start making money, you don't have to worry about somebody coming to snatch it out from under you. All right, so here's a little more detail on, if you don't mind, I'll just read through what some of these are. So in a sole proprietorship, one person is responsible for all of the day-to-day operations. It does not create a separate business entity. We already talked about that. You definitely want to set up your DBA, right? Put up your shingle, your business name, so people can know where to find you, and that you're providing some kind of service or product that they might need. It's the same thing with a partnership, except there's two or more people. And then you have limited liability companies here. So the IRS will treat you. This is another reason why you absolutely should get tax and legal advice, because depending on exactly how you set up your business, the IRS will treat you either as an LLC, a corporation, a partnership, or something else, right? And all of this that we're talking about tonight is really to do with the IRS. You can't just start up a business and start collecting money and think they're not going to know about it, right? They want to know everything, everything you do, so that they can get their share or their cut of the money, right? So you want to make sure with an LLC you get the right type of advice, so you understand what is a LLC corporation or a limited liability partnership, or is it a single member LLC? How many people are part of this organization? Do not skip that. Then for the different types of corporations, so a C corporation, the biggest thing that people have been moving away for C corps because of this is the double taxation, right? So you have a company, it provides the most personal liability. You literally are not personally liable. You have a corporation, doesn't matter what you do, something goes crazy, they only sue the corporation, not the business owner. But when the company makes money, the corporation declares, all of its expenses, revenues, etc., and it pays taxes on the amount that it generates, and then it pays you a salary as the business owner. Out of your salary, then you also have to pay taxes. So this is the type of double taxation that people really, really try to avoid. And when LLCs were formed, I want to say like 25, 30 years, maybe not even 30 years, maybe 20 to 25 years ago, LLCs kind of arose as a new type of business entity. So many small businesses that were C corporations immediately switched over to LLCs because they don't have this double taxation, right? S corp is, like I said, has different rules, similar filing, but different rules and different tax treatment. So you want to get familiar with what those are. And again, the nonprofit corporations are usually charitable, educational, and religious organizations that operate without generating profits. It doesn't mean they don't make money. They can make a lot of money and they can do a lot of good in the community. But at the end of each tax year, they cannot show that they're making a profit. They have to donate it. They have to, sponsor children. They have to do something with the money, but they cannot show a net profit at the end of the year. Otherwise, they may lose their tax exempt status. So I hope this didn't go too fast, but that brings us to the end of our presentation. And we thank you very much for joining us at the African American Chamber of Commerce of the Hudson Valley, where we pursue Black excellence in business. And here's all of our contact information. And please let us know if you have any questions.
So we're going to open it up for questions, just in case anybody needs to, for Jillian to expand on maybe some other corporations or how you should incorporate. So are there any questions right now from anybody that's in the chat?
Okay.
Well,
I have a question.
Okay.
Hi, my name is Nia. I just wanted to know, under like a corporate, like your business, how many other businesses can you have under? Like if I get an EIN number, like is it one EIN number? Like if I start a childcare place and then I want to do like a cleaning business, like are they under the same EIN number, or do I have to get different ones? Or
No, that's a really great question. So the thing with an EIN, well, with a DBA, once you create a DBA, I was told that you can create multiple DBAs under one EIN number. I don't know if there's a limit to it, but you could easily have like 3 DBAs under one tax ID number.
So I will just tell you what I instruct my customers. I tell them that each business should be a separate entity, because you don't, in the event that something happens, it could be a claim. And it could be, if you're a cleaning business and you use some wrong solution and someone gets injured, from the solution or something, that could tear your business apart. Like the entity is gone. So if you have 2 businesses under one EIN, then both businesses are going down.
Yeah. It might make sense, Nia, if they're kind of related businesses.
I tell people not even if it's
related, if they're related. Yeah.
If you're operating 2 separate businesses, then it's just like me. I have TR Insurance Agency. I have TR Tax, and I have TR Travel. They all are separate entities, separate tax IDs, and I treat them as such, all separate, because one doesn't affect the other.
And that's the safest way to go. That's like the safest way to go.
Okay. Thank you. That was very helpful.
That was a good question.
That was.
That was an excellent question. I think that, and even now, people all you hear is LLCs. Every time, because so TR tax, we do incorporations. So we can incorporate your business for you. We don't deal with the sole proprietors because you can go right to the county and do that. But we do incorporations with LLCs and with corporations. And what I will tell you just from experience is LLCs are made for certain types of business. And this is an opinion and how I've been doing business in the last 20 years. In my perspective, and talking to different accountants and attorneys, LLCs are good for real estate. LLCs are good for if you're like in the music industry and you're going to have numerous members of your incorporation. So think of if you're going to have several members or if you're going to be able to sell off parts of your business, an LLC would be the way to go, is how it was always explained to me. All my businesses, I choose to do an S corp, and I choose to do an S corp because whether the business has, whether we make money or we don't make money, then I'm paying tax one time.
Right.
And it follows on your tax papers. It's on a Schedule K. And again, if the business made money, then that money is then you pay it on your personal taxes. If there is a deficit and there's no money, then that also carries over and you get, the incentive that way. To just expand a little bit on the S Corp. So I've known several people in business. So the C Corp is like a funnel. So if I'm in real estate investment and I have multiple properties, I would have them in LLCs. So I would have 125 Main Street LLC, 135 Main Street LLC, and then I would have my C Corp where everything will funnel so that I'm paying taxes one time. So the most important thing is to get a good tax person.
Yes.
You want to have a very competent tax person, whether it's a CPA, because just because they're a CPA doesn't mean they're a competent tax person. You want somebody who's well-versed in the different corporations and how the taxes work.
And also certain types of industries too. Yes. Like you'd be so surprised, people who are really good at doing taxes for, real estate investors and all kinds of real estate stuff may not be good at doing taxes for a different type of business. There's so many different rules. Yeah. So that's something to keep in mind as well.
It's very important. And then, like I said, with the C Corp, all of your LLCs, everything is being funneled through that C Corp. So you're not paying taxes individually on the LLCs because everything is getting funneled through the C Corp. And in actuality, my accountant wants me to do that now because I have several businesses and they're all owned by me, 51% or more. He's telling me to create a C Corp and then so that I'm only paying tax one time for all the businesses because I own 51% or more of all of them.
So they would all be subsidiaries of the main corporation.
Of the main corporation. But then again, it's the one tax that you pay. So definitely. And again, if you're a member of the chamber, we have those resources for you. We have accountants that are well-versed in all different industries. We have a couple of accountants actually.
Right.
So depending on the industry that you're in will determine what accountant works best for you. Mm-hmm. Now, I see the moderator has her hand up.
Yeah.
I just wanted to share that you guys are absolutely right, that don't just jump into a structure because it sounds good, because I made the mistake of actually filing my business as a C Corp to start, and I don't got no money. What am I doing with a C Corp? So now I switched to S Corp, but it's still it's just a lot. It's a lot to manage. You have to pay for extra, to get your taxes filed. If you're not making money, it's probably not profitable to have a C Corp. Or so it's just definitely check it out. Don't just go to LegalZoom and file that LLC.
Oh yeah, don't do that. Don't do that
at 3 in the morning.
Yeah, no, and you're right too, because it is the most expensive type of business entity to file. So that's another factor. It makes sense if for a large business, but for most, startup business, new business, small business, it doesn't make sense for most. So that's another thing. Good point, Danielle.
Costs more money to close it than to keep it open. No,
Oh
it
my
costs more
God.
to the tattoos being open. I'm just stuck with it. But I like the ink. I'm loving the little ink on my name.
There you go.
Mhm.
It is kind of cool.
So if starting out like with childcare, like just saying like a 24-hour daycare, would you say go LLC, or would a person be able to start like sole proprietorship but have insurance?
I never say, my advice is always never start off with a DBA, especially if you're starting off and you have nothing to lose, then I would say, I still probably wouldn't say do a DBA, because the DBA leaves you so exposed, your personal stuff. So especially
Right.
if you're talking about children,
Mhm.
because with children, you have abuse, molestation, and you may not be doing none of
Major
that.
liability.
You
Mhm.
may not, if none of those concerns may arise. However, someone can say one thing and you're in a lawsuit, and now you're concerned about, your house, your cars, because they're going after everything.
Yeah.
Mhm.
And
Okay.
that the entities protect your personal assets.
Okay.
So I never say do. I started off back in 2003 as a DBA. And then once I got educated on how the different entities work, I immediately incorporated.
Mhm.
So especially dealing with kids, I would not suggest doing a DBA. I would do an S corp. I would do an S corp.
Mhm.
But it's always a great idea to talk to your tax profession, because they know your tax bracket, because maybe you have some other liabilities that are, undisclosed to us. So,
Right.
but your tax person would know, where you are financially, and the tax bracket that you fit in, and they would be best to advise you.
Okay.
I can tell you overall, I would say definitely, I would rather you do an LLC than to
Right.
do a sole proprietorship.
Mhm.
So we have another question. Which entity would you, I would say any entity besides a sole proprietorship. So
What's
you're
the
talking
question?
about, the question was, what type of entity would you suggest for a dispatcher? So I'm assuming a dispatcher for trucking. Again, it depends on where you're incorporated to. And I think we just automatically assume that we're talking about New York,
Right.
um,
It's different in, yeah.
because it's different in every state. So when you're in the state that you're in, it's considered domestic. You're a domestic entity. However, you can go to Delaware, which is a free state. And when I say free, you don't pay for state taxes. And you can go incorporate in Delaware. And in actuality, an LLC is way easier to incorporate in Delaware than anything else, because you don't pay the taxes. So it puts you in a different tax bracket. So again, I go back to always consult with your accountant and or financial professional, because where you are, where you're located, what state you're going to be operating in, doing business, all matters.
It all matters. And every state has its own rules for filing certain types of documentation. And then you have to deal with all the IRS filings. So it's not a willy-nilly thing, guys. Get some advice before you jump in with both feet.
Those were great questions, even though we had to pull it out of you guys.
Yeah.
I have a question.
Okay.
My business is, you guys told me 2 weeks ago I don't need an LLC. But I do a lot of different things. I don't really have one thing that I do. I make items for households. I do parties. I do decor. I make t-shirts. I make vases. I make drinking glasses. So I'm like a little bit. I make t-shirts, bags, just all types of things. I do events. I'm all over the place. So for that type of business, you guys stated that I wouldn't need an LLC, but I'm trying to figure out what would I need, because I'm kind of all over and I don't have like just one thing that I am doing. And I mean, like Tamika was saying, you know, as far as like if you're doing hair, you know, putting chemicals and things like that, I understand. Most of my stuff people can't get damage from, but I guess accidents could happen. You know, if I sell vases or glasses and someone cuts themselves on it, or get sick from some of the things that I may use to make the materials. I'm just confused on what type of insurance I would need for my type of business. It's really a crafting and like event planning business.
That's what I was gonna I was gonna say you are an event planner. You're in that event space because everything that you named falls into that
Right.
planning
Right.
space. So we're not accounting professionals. However, I, in my opinion, and I'll let Jillian chime in as well. I would say an S corp because you don't know how your business is actually going to go. Some months it may be really, really good because you have a lot
Right.
of things, and
Right.
then other times it may not be as well. So I would suggest doing an S corp because again, you're not paying double tax, and that's coming onto your personal taxes.
Mm-hmm. Okay.
And one of
Okay.
the interesting things I learned about S corps too, with this whole conversation of LLCs, you know, LLC. Once you, let's say you started with an LLC, once your business starts making certain net profit, I think the threshold was like 40,000 net profit. Then you've crossed a threshold where you really, it doesn't make sense to remain an LLC, and IRS rules require once you reach a certain net profit that you have to change to some other entity type. And usually people just graduate up to the S corp level. So the amount of profit that your company is able to declare is also a factor in deciding the business entity type. And then for all of your crafting stuff, even though most of it is generally safe, you might still need to protect yourself from fraud, right? So, you know, somebody might say you printed a t-shirt and something about the t-shirt offended them, and, you know, they want to sue you, cause them mental distress, something really stupid. Or somebody bought something on your website and then turn around and try to like claim that it was an unauthorized purchase. You never know, right? People, there's all kinds of shady things, but to consult with a tax person or an attorney about exactly what it is you do, where you do it, and they will be able to help you decide what's the best entity type. Even some things that seem really, really simple, people are really strange out there. And you always, the idea, again, I want you to remember this, all of these entity types is about protecting yourself from different levels of personal liability. These two have the least personal protection. Let me correct that. They have none. You're basically doing business as your own personal name and your partner's own personal name and your own bank account. Anything that's under your name, if somebody decides to sue you or file a bogus charge against you or claim against you, it's going against you personally. You start to get some personal liability protection when you choose any other entity type. This one has the least, but it's a start. Corporations, a C corp has the most personal liability protection. So this is really what we're talking about when we're telling you to choose an entity type. It's so that whatever type of business you do, how you do it, who you serve, what the customer base is like, at some point you may need to protect yourself. If somebody sues you, has an accident, says something burned their skin, something dumb, it doesn't even matter what it is. You don't want them coming back to you and just suing you for everything that you own. That's the whole point of doing this. And also to stay out of trouble with the IRS.
Okay, we have a couple of more questions. I see Nia, you have a question, and then we'll go to Crystal. So Nia, unmute yourself.
Yes. I wanted to know, in regards to business loans, is it easier to acquire funding through like LLCs or S corps?
I don't know if there's much of a difference as far
There
as
really isn't, but
funding.
there isn't. But next month we actually will have a business loan professional doing a seminar.
Okay.
And he's going to be talking about, actually the chamber has partnered with a third-party company to help our our partners and our client base to build business credit. And it's going to be a 60-day program. So it'll help you get credit cards for your business. It'll help you get loans after a certain amount of time, and just build regular business credit, net 30 accounts. So
Nice.
look forward to that webinar. That'll be coming next month.
Okay.
Crystal had a question. Crystal, do you know how to unmute yourself? Or
Yes, ma'am.
okay.
Hi, good evening, everyone. My name is Crystal. I hope this question isn't silly. It's in regard to accountants. I wanted to know, how do you get well, I know they're very much necessary when dealing with, large amounts of money, especially coming from businesses. And I just wanted to know, how do you get an accountant, and how can you trust accountants, being that there will be large amounts of money? And do you have to also keep up with, what they're keeping up with? And what if you don't know how to do that? How can you trust them to know that, your monies are being calculated and, taken care of the way it's supposed to be?
Well, what kind of business are you talking about, for example?
Well, the business I'm trying to go into is opening up a beauty supply store.
Okay, so generally, when you're talking about you're starting up a business and you need an accountant,
Mm-hmm.
they're really not touching your actual money. Like, so you're going to have all kinds of payment processing systems. You're going to be selling products.
Right.
That money is going to go into your account,
Okay.
right? You may hire a payroll company, right?
Okay. Mm-hmm.
And they tell you, this employee worked this many hours, they pay these many benefits, send us this much, right? They have a whole system.
Okay.
And all they're getting is the amount that needs to be paid out to your employees. They're not getting all of your money.
Okay.
Then when you're ready to file your taxes, your tax person, they're going through all of your receipts and your documentation and, your expenses and all of your deductions. They're not really handling your money. But there are so many really good tools on the market now for small and medium-sized businesses and big businesses that can help you keep track of your revenues, your expenses, what you need to pay at tax time, even payroll, right? So they have QuickBooks.
Okay.
QuickBooks does a lot of things, and it even tracks mileage, right, for different types of business. So, you might be a service provider, you might be going around to see clients. You get to deduct your mileage for that. They can track your mileage. You bought $20,000 worth of hair relaxers and hair gels and conditioners and shampoos last month. You have a receipt for all of those. They track everything,
Right.
and it's all automated online. So nobody really has access to your actual money.
Got it.
So that's a good way for you to be completely transparent of all the transactions, what's coming, what's going, before you have.
Right.
So
Okay.
nowadays you can be pretty safe.
Okay. So when does the accountant come into play?
So I think what you're referring to. So yes, I have an accountant that does have, he knows my account numbers, he knows my
Okay.
access. I think it's building that rapport and that relationship. Now,
Okay.
any changes or anything that's done, or actually when he logs into my stuff, I get a notification telling me that he has logged in, or so the person in his office has logged in or whatever. I think, but you want to learn your business, even if you have an accountant, you want to know your business better than anybody else knows it.
Got it.
And whatever he's doing,
Absolutely. Yeah.
you should know how to. So I'm not like I suck at QuickBooks, quite honestly, but I know how to go in and check my money.
You can see
I know
what's what.
But I know
Gotcha.
how to do an activity to figure out all the different things that have happened, or what has transpired in the last 30 days. I could do reports and stuff like that.
Okay.
And quite honestly, Google or YouTube.
Google and YouTube, girl.
Gotcha.
They tell you everything. But once you become a member of the chamber, we actually have courses. And I can't remember right now. You can look on our calendar on our website. We definitely have QuickBooks webinars that will teach you how to use QuickBooks, different functionalities of it. I know we have a basic. We haven't gotten to an Excel because, again, we're trying to start from ground zero.
Gotcha.
Yeah, like really, really simple.
Basics.
And to add to that, in spite of all the tools that exist and all the people that you might build relationships with, I never forget this one thing I learned from Oprah Winfrey when she was explaining to people before she hit billionaire status. She would always say, no matter who she hired or what they did for her business, nobody else is allowed to sign any checks.
Okay.
Right? So
Makes
yes,
sense.
you might have different professionals coming and providing different services for your business, but only you have signing authority to
Okay.
authorize payments to any vendors anywhere. So that is also another, it's a good practice, you know, especially until you get more confident in how your business operates and
Right.
what goes where.
Absolutely.
Don't give anybody else signing authority to be writing checks and paying vendors.
Okay. Thank you.
Yeah.
Thanks for the question.
Thank you for answering that. That helped. That was very helpful. Thank you.
You're welcome.
We like to be conscious of the time. So I see that we're at 7:27. So I want to make sure there's no other questions. No one has any other questions. I'm just checking the chat. I think we answered all of those. I want to thank everyone for logging on and taking part of buying a business versus starting up a business. I hope this was informative and you got out of it what you needed to. Jillian has so put up our information. So our office is at 77 East Main Street. We're on the second floor. That number actually has to come off, but that is the correct email address. So info@aacchudsonvalley.org, and our website is aacchudsonvalley.org. I thank each and every one of you for participating, and I hope that you have a wonderful